Okay, so the first thing you had to learn in this chapter was sort of how to interpret a statement of cash flows, right? So we looked at 3 different companies and saw how they differ. So now you're going to learn how to build one, okay? And I'm going to show you kind of why we do what we do to build one, and then I'm just going to sort of give you a formula so that if you don't care so much about the why, you have a formula that you can use. Okay, so we're going to prepare a statement of cash flows, and it's not possible, as I put on here, you can't analyze every transaction like we did over the last day, on Wednesday, right? We can't go through every transaction for every company. That would take forever. So we're going to use the statements that we have, that we already prepared, which would be the income statement and the balance sheet, and we're going to use those to create the statement of cash flows. Okay. So in order to do that, I just wanted to remind you about a couple of things financial accounting wise, okay? Just so you remember what's on the balance sheet and the income statement. So I don't know if you remember, but when we created the balance sheet and the income statement, we're using accrual accounting. Do you guys remember what that is? Well, let me go down here to the next example. So let's just say on the last day of the year, we sold $100 of services on account. So let's just say we did lawn mowing, right, on account. How would I record that? Do you guys remember? Hang on, my pen's not working. So on account means that the customer didn't pay us yet, right? Does that help?
Yeah. So, credit?
Yes. So we debit accounts receivable. And then what do we credit? So service revenue. Yep. Right. So in accrual accounting, you get to record revenue before you get paid, right? And sort of the same with expenses. You can record expenses and then a payable, okay? So in this particular case, if this is all that happened this year, what are our cash flows? Is either one of those cash? No, so it's 0, right? So we have no cash flows. So cash flows is 0. But what's our net income? If you remember, net income is basically revenues minus expenses. It'd be 100, right? Yeah, 100, because we recorded revenue of 100. So what I'm trying to get at here is that cash flows are not the same as net income, right? They're 2 different things for any company that has any kind of accrual entries, which is most companies. So even though, what statement would we find this on? Do you guys remember? Which one is revenues minus expenses? Income statement, okay, good. So we're going to use the income statement to get to cash flows, but we're going to have to make some adjustments because net income is not the same as cash flows. Okay, so we're going to use the income statement and the balance sheet to create a statement of cash flows. And plus, we're going to use some other information, but. Okay, so like I said, I'm going to explain the why for those people that like to understand the why, but don't freak out if you don't get the why. Okay? So this is basically a balance sheet, right? Assets. Remember, assets have to equal liabilities plus stockholders' equity. You guys remember that? Hopefully. You don't?
The equation aloe.
Say it again.
Aloe.
What is aloe?
Oh, well, that's how Professor Johnson taught us, like assets.
Oh,
equals
assets. Okay, yeah, I've never heard that. Okay, yes, that's what this is, right?
Mm-hmm.
And so this side has to equal this side. And so cash would be on here where? Right, cash. Okay. Can you guys give me some examples of liabilities and stockholders' equity accounts?
Rents would be like.
Rents payable? Okay.
Accounts payable.
Good. And these would be current liabilities, right? Do you guys know any long-term liabilities? Mhm, go ahead.
Long-term interest.
Long-term interest payable. Okay. And so we'll put these are non-current down here. How about yeah.
Common stock.
Common stock? That goes down here, right? Good. Do you remember what? There's another thing that's under stockholders' equity. It's okay if you don't remember. Anybody? Retained earnings. Good. Okay. And retained earnings is made up of two things, right? It's made up of dividends and net income. Okay, so clearly there can be a lot more, but we're going to start here. So we agree, right, that assets have to equal liability plus stockholders' equity, or you guys are calling this O, right, owner's equity, right? We agree with that statement, right? So is it also the case that changes in assets have to equal changes in liability and changes in stockholders' equity? So say this started off like this. Okay. And then this goes, let's say it goes to 12. What would have to happen on the other side?
So one would have to go.
Or either, like we don't know which one, but we all agree that this would also have to go up by 2, right? So, right, changes in assets have to equal the changes on the other side, right? So in this particular example, right, what assets do we have?
Cash.
We only have cash, right? So I'm going to write change like this, right? Delta means change. So our change in our assets, which in this case is just cash, has to equal our changes in liabilities plus our changes in stockholders' equity. make sense? Okay. Changing cash, we also call what? This is cash flows, right? Changing cash is our cash flows. How much cash change from one period to another is our cash flows. So if the whole point of the statement of cash flows is to identify what these changes are, we can figure that out by just looking at what the changes are in our liabilities and the changes in stockholders' equity are. That's how we're going to figure it out. Does that make sense? Okay. So that is kind of the why we're going to do what we do. If you don't remember that and don't like it, it's fine. Okay. So if we look at this balance sheet right now, what kind of activity, I'm just going to cross off the retained earnings because it's made up of these two things. You don't have to cross it off if you don't want to. The common stock and dividends, what kind of cash flows are those? Remember?
That's fine.
It's financing, right?
Yeah.
Okay, these two are financing. And I'm going to include one here. I'm going to say long-term notes payable. What kind of activity would changes in notes payable be?
Could you repeat the question?
Yeah. Notes payable, right? If notes payable changes, goes up or goes down, what kind of activity? This is a non-current, so it's no. It's one of the three, right? So how do we, remember at the very beginning of my bakery, how am I going to get money? I can either sell stock or I can get a loan, which is this. Oh, make sense? Okay, so generally speaking, your financing activities are everything over here, either in long-term liabilities, common stock or dividends. Those are your financing activities. Okay.
So even
This one, no, and I'm just going to scratch this off, just because I don't want us to get confused, because we remember
interest would be operating.
interest is operating, and so we're just going to not deal with it right now, because remember, it's a weird one. Okay, so financing activities are over here. Do you guys remember giving an example of an investing activity?
Long-term asset?
Right. Yeah, I'm buying or selling long-term assets. So over here I have non-current assets. And I'm going to put property, plant, and equipment. So this is my investing activity. Any changes in that is an investing activity. So then anything else that's left is going to be operating activities. So anything here, so any of our current liabilities are going to be operating activities. Any current assets we have over here, like accounts receivable, inventory, these are going to be operating activities. And then net income is going to be in the operating activities section. So when we're gonna use the balance sheet, well, we're gonna use the income statement, right, because this is gonna show up on the income statement. And then we're gonna use the balance sheets to look at all the changes in all of these other accounts to get the numbers, okay? So, let's just make sure that we're clear. We sort of did this a little bit on Wednesday. But so, for example, for common stock, right? Whoops. Right, we're going to look at the changes in all the accounts. So common stock, right? We're going to have the beginning balance, whatever it was on the first balance sheet. It could go up, it could go down. We're going to end up with some ending balance. Remind me what makes common stock go up. Issuance of common stock, good. So is that going to be a cash inflow or outflow? Inflow, right? That's the whole purpose behind selling stock. And then what section will we find it in again? Good, financing. What makes it go down? So that doesn't make common stock go down. Yeah, if we buy it back, yes. And is that a cash inflow or outflow? Good. Which section? Good. Brody, we can talk about dividends, right? Dividends, are they a cash inflow or outflow? Mm-hmm. Which section? Good. Okay. Questions? Everybody okay? Right, and then just to reiterate, property, plant, and equipment, again, we're going to look at the accounts. Beginning balance, we have additions, subtractions, gives us an ending balance. What makes PP&E, right, I'm going to call this PP&E. What makes it go up? Why would PP&E go up? Right, we bought more, right? That means we bought more. Assuming we paid cash, is that a cash inflow or outflow? Good. In which section would we find it? I heard it somewhere. Investing, good. And then what makes it go down? Mm-hmm. Right, assuming we got cash for it, that's an inflow. And then what kind of activity? Good. Okay, so this is an example, an abbreviated example of what we would find, right? This would be the balance sheet for year one. This is the balance sheet for year two. Take a minute and see if you can fill in those blanks. Okay, so how about PP&E? What'd you guys get, increase or decrease? It increased, right, by 25. Is that an inflow or outflow? Good. Category? Investing, good. Loan payable, did it go up or down? Down by 50. Is that an inflow or outflow? Outflow, right, because we paid off part of the loan. What category would that be? Financing, good. Common stock, did it go up or down? Right, increased by 50. Cash inflow or outflow? I heard both. So if our common stock went up, what does that mean? Right, people bought it, so it's a cash inflow, good. And then what category would that be? Financing, good. Okay, so when we create the statement of cash flows for investing and financing, this is what you're going to do. You're just going to analyze the balance sheet, compare the changes, figure out where they go, okay? So down here is where it gets a little tricky. And again, I'm going to walk you through why we do what we do, and then at the end, I'll just give you the formula, and if you just want to memorize that, that's fine too, okay? So we are going to figure out operating cash flows using the indirect method. This is what's most commonly used by companies. It's what's in the regular part of your chapter. Don't read the appendix because they use the other method that we're not going to cover, okay? Because I'm sure y'all are reading above and beyond what I asked you to read, right? Okay, so we're going to figure out the formula, and I'm just going to let you know that we always start with net income from the income statement, okay? That's kind of our shortcut. We're going to start there, right? If we had no accruals, then our net income would be our cash flows, but we do have accruals, so we're just going to adjust it. So let's say in scenario 1, this is all that happened in the company, or this is all that they're telling us. We had cash sales of services for $150 and depreciation expense of $50. So what is going to show up on our income statement as our net income? Remember, net income is revenues minus expenses. 100, right? Because we're showing 150 of revenue, right? And then depreciation expense of 50 gives us net income of 100. Good. But what is our cash flow? Do you guys remember what depreciation expense is? Remember, it's when we're like using up something. Are we paying cash for depreciation? No, it's non-cash, right? Does that help? It's 150, right? So we have cash sales of services for 150. So we actually got 150 in cash. So our cash flow is $150. Okay. So if we were to create our statement of cash flows, right, what do I say we always start with? What's the shortcut? Right. We always start with net income. Okay. So the statement of cash flows would look like this. We'd start with net income that you just told me was 100. We want to end up with cash flows from operating activities because we're just talking about that category right now. And you guys told me that was what? 150. So how do we get from there to there? What do we have to do? We have to add 50. And what is that 50? Where did it come from? Depreciation? Yeah, so we have to add back the depreciation expense. Okay. Because when we calculated net income, we took out depreciation expense, but it's a non-cash expense, so we have to add it back to figure out our actual cash flows. That makes sense? So the very first step that we always do is add back depreciation expense. Okay. So if you look on page I think it's 9. Right, here's where I just give you the formula. So to figure out operating cash flows, you're always just going to start with net income, and then step 1 is add back what? Yep, add back depreciation. Good. All right, let's look at scenario number 2. Is everybody okay? Everybody good? Okay. So, new scenario. They're going to tell us that the only things that we know is that net income is 250 and accounts receivable increased by 100. So, right, I need to figure out what my net income is and what my actual cash flows are. So what is my net income? 250, right? They told us that. Can we figure out, based on this, what our actual cash flows were? What does it mean if accounts receivable goes up? What makes accounts receivable go up? So, okay, yes, we're getting there, right? So you're right, we haven't received that 100, but accounts receivable went up. So if we were to do a journal entry, which you do not have to memorize, like, this is not financial accounting, but, I mean, this is not, we debit accounts receivable, do you remember what we would credit? Revenue, okay, perfect. Right, so this means we made a credit sale, right? Okay, would this number be included in here? How do we define net income again? Revenues minus expenses gives me net income. So then, would that credit sale be included here? So that is the whole difference between accrual accounting and cash basis accounting is, yes. So what probably happened here is we had debit cash, credit revenue, some cash sales and we have some sales on credit. I don't know why that keeps doing that. Does this make sense? And then they ended up with revenue of $250. Yes, revenue of $250, and we're not showing any expenses, so net income is $250, right? But if 100 of that is accounts receivable, then what's our actual cash flows?
150.
Good. So how do we get from there to there?
Let's subtract accounts receivable.
Yeah, we have to subtract the change in accounts receivable. Just because that if accounts receivable increases, right, it means our net income went up, but we didn't get cash from it. So if we move back to page 9, the second one is subtract changes to current, and I just showed you accounts receivable, but this holds for any current asset. So you're going to subtract any changes to current assets. Okay. So let's say inventory, right, that's a current asset. Let's say inventory went up by 50. Am I going to add or subtract that change? Subtract, right? Does that make sense? What if inventory went down by 50? What am I going to do with that change? You're going to add, right? So this is always going to be the opposite. So any current asset change, you're just going to do the opposite. Okay. All right, you guys are doing good. You're holding on. I appreciate it. Okay, we are almost done with this. Okay, so scenario number 3. Right, the only 2 pieces of information that we're given is that net income is 170. And accounts payable increased by 70. And you know what, to make this super easy, I'm going to change this from accounts payable to salaries payable. I think it makes the explanation just a little easier to understand. Do you guys remember what would make salaries payable go up? We owe money, that's right. So why do we owe money? Remember what the other side of that would be? Right, so if we owe someone money, it's because we incurred that expense, right? So we would debit salaries expense for 70. So this is a non-cash transaction, right? Would that $70 of salaries expense have been included here? it's an expense, right? Which means that $70 got subtracted when we figured out net income, right? But it's non-cash, so we didn't pay it. So does that make sense? So what probably happened was we had debit cash, credit revenue of so if this is what happened, then we'd have revenue minus expenses, 240 minus 70 gives us net income of 170. Okay? So just if your current liabilities goes up, it's generally because you recorded an expense that was non-cash. So what are my cash flows? 240. How do I get from there to there? Yes. So you're going to add the change in salaries payable. So that is the step here, number 3. We're going to add changes to any current liabilities. Okay. So if interest payable goes up, am I going to add or subtract that change? If interest payable goes up. Let's just say interest payable went up by 50. Would I add or subtract that? Add. So with assets, it's the opposite direction of the change. With liabilities, it's the same direction as the change. Okay? Okay. And then the last step is this one right here. So if they tell us we had net income of 100 and you had a gain on the sale of equipment, right, my net income is 100. But what kind of activity is that? It's an investing activity, right? So we don't want this, right? This number, that gain on sale, is included in our net income, right? It's on our income statement. We don't want that in our operating cash flows, so we just have to get rid of it. Does that make sense? We want to move that over to the investing section. So I just have to remove the gain. Okay? So your cash flows are going to be 70. Because we want to move this and that gives us steps 4 and 5. So we're going to subtract any gains and then we're going to add back if we had any losses, just to remove that impact on net income. Okay, so these are the steps to figuring out cash flows from operating activities. So we have a few minutes. Let's just, because we don't really have time to do this whole thing, let's just take a couple minutes and see if we can figure out what categories all these, so these categories that these items are going to be in. Right, so I'm giving you the changes to the balance sheet account. So I'm basically giving you, I'm not making you look at balance sheet 1 and balance sheet 2, I'm just telling you what the changes are from year 1 to year 2, okay? So let's just go through. We're going to start with cash and cash equivalents. If I were to look at my statement of cash flows, where would I put that one? Okay, so this is the one that everybody wants to put there. What is the point of the statement of cash flows again? Remember what the bottom 3 lines are of the statement of cash flows? Remember the bottom 3 lines are, we add up the totals of these 3, right? And we get total cash flows. You're going to add that to your beginning cash, and you end up with your ending cash. This is my change to cash. Where does that go? It's this right here, right? That's the whole thing we're solving for. So this is my 17,000. Right? Do not put this in operating. Does that make sense? It's the whole thing that we're solving for, right? Okay, how about change in accounts receivable? What section would I find that in? Operating, good. Am I going to be adding or subtracting that? Do you remember? Subtracting, because it's the opposite with current assets. How about inventory? What section is that going to be in? Am I going to add or subtract that one? Add, right? This means it went down, so we're going to add this one. Prepaid expenses, right? That's another current asset. So what section? Am I going to add or subtract? How about, so long-term loans to stubs, I don't know if you remember, this is an investing activity, right? This is a long-term, it's an asset for us because we loaned somebody else money. And so this one's also going to be an investing activity. How about PP&E? Kind of activity. Investing, good. This is accumulated depreciation. That one's a little bit tricky, but accumulated depreciation changes when we record depreciation expense. What section of the statement does that fall under? Depreciation expense. Operating, right? Was the very first thing we did to the operating. Yeah, good. All right, we will stop there. So, if you guys noticed on Canvas, right, you don't have any like formal homework for the weekend. what I would do is make sure that you can easily classify everything. You don't have to have what we just did memorized, but there might be some reason that you want to have the categories memorized for next week. Okay? Okay. Well, I hope you guys have a great long weekend, and I will see you on Wednesday